Hey guys, welcome to another live trading series. I know this is coming out on a Sunday. It's September 6th right now. I'm not going to be doing any live trading today, obviously. I ended up filming and scrapping some of my material for this week. It ended up being, I think I was doing two risky moves and I didn't want to put it out there for people to watch and to follow. Again, I do like taking risks, and especially with what happened in the market this week, I think it was a bad time to put this information out there. So I think I'm going to change my strategy a bit going forward, because if what happened in the past week happens again, if I'm not careful, I might get burned. If I try to tell people to do what I'm doing, do these like risky verticals, I don't want anyone to lose money on my behalf. So I think I will start going a little safer in the future, at least until after the US election is done. I do want to give a update on my monthly income. I know it's like, a week in September, but I just want to show everyone what I've done for August. If we take a look here, I'm at 8,500 US in additional cash. So what that means is I've been selling options, but it doesn't this is the increase in cash. It doesn't necessarily mean this is like the money I've made. I don't know how to count it actually. So 2,200 is the options I've closed. So this is what I've actually realized. And 6,200 is actually still open. So I don't sell weekly. I don't sell a lot of weekly. I usually do monthly, like covered calls or cash secured puts. So I sold mid-August and they would expire mid-September. I think September 18th is when most of them are coming around. Some of them are staggered a little bit so I don't get burned all at once, but this is what this means. I've been trying to do less verticals, less credit spreads. What I do is a little bit riskier. I do want to change my strategy, go a little safer. You can see what I did in August, like a lot of 50 contracts. I'm going to try to take that down maybe to 10 to 15. This is a little too much. I'm not making enough for the risk if something bad does happen. Again, like I do monitor it, but something bad could happen. So 1,800 in verticals, 630 in covered calls, and then 6,000 in cash secured puts. The bad thing about this, I do want to kind of change this up a little bit. Cash secured puts, if everything goes down like what happened this week, I'd use all up my cash because everything might be assigned. Covered calls, like obviously these will make money when the market goes down, and then I think I just need to vary this a little bit. I need to make more off my covered calls and then less off my cash secured puts. So if the market does tank, if I'm making 3,000 on covered calls and 3,000 cash secured puts, at least then only half of my stuff would get assigned, and then everything in my covered call would kind of make more money. I'm not sure what to do yet. I do need to vary my strategy a little bit. I think one thing that was asked, everyone wanted to know how much I was making in terms of my portfolio. So I have 146,000 US invested in options. So my total portfolio, I think, is around 450,000 US total. Most of my positions are long, and then I use around 140,000 for my options trades. And then here, this is, I made 5.8% this month, but I play on margin a lot. I most of my, like this entire vertical was made on margin. So I made 421, not related to any capital I put up myself. Then if you see some of the Tesla trades I did, where's Tesla? Over here, 5 lot. So I made like 487 US, but this was all on margin. Like I do short-term plays on margin. And here's probably why I'll stop doing that. I got burned on Apple here, and I got burned on these Apple verticals. It could have gone a lot worse if I had these verticals open when Apple tanked 4 or 5% on Thursday. This would have went a lot worse. I think I'm not being careful. I think I have to go a little bit safer. I'm probably gonna do 10 contracts only and maybe go further out, giving myself a little bit more buffer and more room to play with. So like if we compare to what I did in July, so I had 138,000 in July starting, and then obviously added this 6,500. That's where I got this 146,000. So 4.74%. If you just want to compare, I had more realized at the end of July versus unrealized. I made more on verticals and iron condors. I stopped doing iron condors. I'm not good at predicting a range. I don't like managing it. It's too much work, so I'm just sticking to verticals now. Made more on my cash secured puts. So made less on my cash secured puts, sorry. So this is the strategy right now. If we look at the first week of August, These are some of the plays I made. This is what I didn't want to film and didn't want to put out there. So I made around 1700 US playing the VIX. Like, so UVIXY is pretty much the volatility index. So when SPY was tanking, this was going up. So I ended up, short. Well, I sold put credit spreads because I knew it was going up, but I don't think I'll be playing this in the future. It was a little too risky. So 8,500 in gains in income in August. Hopefully, I'm well on the way to matching that, if not beating it in September, but I will be going a little safer. If you guys want to know some of my open positions, so I do need to fix this. I don't like the way it looks right now. It is getting kind of confusing, but these are all the plays I've made. Obviously, if you see a blue here, these are the ones that I've closed and I've rolled them. So Bank of America, I do monthly, and then as the end of the month, I think August 18th, that was when it was expiring. I closed it, reopened one. This is August 18th to September 18th. I'm just using rough estimates. So this is everything that's happening here. Fastly, hopefully this will expire worthless. One thing I was pretty unhappy about is my Spotify play. As soon as I put this cash secured put on Spotify at 270, it tanked. It is around, let's say, it is at $248 right now. I probably caught it at the worst time. I do think Spotify will go up, but it looks like I'm going to be assigned. So 27,000 US or 36,000 Canadian, which does tie up a lot of my capital, but this is the game we play. This is what I've been doing. I think I'm going to stop. Yeah, I'm not sure what I'm going to be doing with TD. Instead of selling so many cash secured puts on TD and Air Canada, I'm going to try to space these out a little bit. I'm not getting enough premium for how much money I'm putting up. So we'll see what the strategy changes there. So these will expire September 18th. I'm going to close these out mid-month and then roll them. Hopefully I can film all of that. I know I'm not doing any trading right now, but mid-month when you guys will see me rolling all of these monthly ones. So like the AMD, I'm not going to be doing Fastly. I'm not going to be doing any of these. I'll be rolling these ones. And hopefully you can all watch that. Hopefully. Yeah, maybe I'll do some Twitter as well. I don't mind if I get assigned on Spotify, obviously it uses a lot of cash and my margin will go down, but I'll be able to sell covered calls. I want to show you how to make like double income on covered calls. This is some of the income I've been making on covered calls, and I just take a look at SLV. This has worked out perfectly. I know I want to get these assigned away, but look at this. I've been selling weekly on SLV, and I made $485 so far. So if we go 485 divided by the 7,800 tied up, if I go percent, I'm at 6.2% in just 1 month. And keep in mind, this is not, I sold a cash secured put on this and I probably made $100. So if we do, if this is around 600, if we take into account what I made on the cash secured put, I'm at 7.69% in just this 1 month. The reason why is that I've been selling almost at the money covered calls. So SLV, what is it trading at? Hopefully I can find it. SLV is trading at $25. So I'm selling one strike up. I'm selling at 26. So the closer you sell to at the money, the more money you'll make on premium. And then it's consistently been closing a little under 26. Everything's expiring worthless, and I'm doing pretty well. I don't mind if this continually ends up getting rolled and I can't continue making more money, because I only have 7,800 tied up, 300 shares at $25. Oh yeah, this is actually even less. What am I doing? If we look at, fix my calculation regardless, you guys understand. If I go okay. Yeah, it's even more. Wow, this is a math fail. Like I'm doing live edits. So let's say I'm making 8% on the month. Regardless, I'm happy. One thing I don't, I'm selling covered calls on these shares. I'm making what is this, $51? 70 Canadian or 51 US, not a big deal. I do kind of like my Afria or Afria. I have 1,000 shares, so I'm able to sell 10 contracts. So I'm making, $350 US here, and I'm selling another for 200. I love rolling these. These are some of my riskier plays. I do want these to get called away, and I can get some of this money back. I only have 9,300 US tied up, not a big deal. I love the premium I'm getting on this SHLL, which is going to be buying Helion soon. So if we take a look at the covered call return, 4.6% in just 1 month. So the strike I sold was 60. I bought at 49. I'm selling the 60 strike. And then I'm getting $280 for one contract, for one covered call, and making 4%. So this is why some of my returns have been a little bit higher. But yeah, what am I going to do for the future? Like, what is my plan? I'm not sure what I'm going to be doing. I want to play a little more with Tesla now that it's gone down. If we do, everyone wants to know, why Tesla has tanked, what has happened. It's gone up a little bit, but let's say from 500 to 418, what was this 17% drop? If Tesla was supposed to have been, it was able to be included in the S&P 500. So it was supposed to be included in this bad boy. People, once it was eligible, people started buying Tesla shares in anticipation of it getting included in the S&P 500. So if it does get included in the S&P, all the hedge funds that mimic the S&P, they have to buy Tesla shares. So everyone was anticipating all these hedge funds buying millions, I don't know, I'm just making hundreds of thousands, maybe million shares, because their hedge fund, their ETF, their index has to match the S&P 500. That's what they do. So if Tesla gets included, they have to have purchased those shares to get the right percentage. They want the right exposure into everything. So when Tesla wasn't included, people started freaking out. That probably caused part of the tank. What is the after hours amount? I know it decreased more than this. I want to find out after hours. Tesla stock, hopefully it has it here. Why doesn't it show me the after hours? I know it is decreased even more. Oh, yes, look at here, guys. 391. So after it wasn't included, the SIBO is like Chicago board. They review once a month what gets included. It didn't get included, and it was released after hours, so it tanked even more. So I guess in a few days, from 501 to 388. That being said, I think this is just like a temporary decrease. I do think Tesla will get included in here in the future. I do want to play more with Tesla. If we go look at some of the premiums on it, I don't mind selling, let's say weekly. Look at this, the implied volatility around 150%. I don't mind selling some puts on this near the money. Let's show all. Some of my plans. Come on, a little quicker. There we go. So if we do, we can even sell like a 2. Oh, there's no 275. I like even numbers. Let's look at the 300. Just for 1 week, if you pay 148, if you earn 148, you're getting 0.5% for 1 week if you just sell this. So if Tesla's trading at 380 and you need, you sell the 300, you would need Tesla to decrease by 21% in just 5 or 6 days, which is amazing. If you want to go further out, let's go to the monthly one. This is annoying. This is taking too long. Sorry, guys. I'll probably cut this part out. If we go 2 weeks out, let's find the 300 strike. If you don't mind owning Tesla at 300, you can earn $4 in premium. For 2 weeks, you'll get 1.33% just for 2 weeks. And then your cost basis will be $296. Obviously, you take the strike minus the premium you received, your cost basis will be around $296. And Tesla would have to have decreased 21%, which could happen in 2 weeks. But I do want to start playing Tesla. I do want to start, holding this maybe long term. I wouldn't mind getting assigned and sell covered calls, hold it long term. But yeah, these are my plays for the week. Some of the ones I want to get out of, I don't mind. Workhorse came in nicely for me. It increased a lot, but I think I'm done with some of these riskier plays. I want to go safer in case something tanks. I might start doing a hedge, like buying SPY puts. So, I'm selling cash secured puts. If everything tanks and I get assigned, and then hopefully I would have made some money by buying the put and SPY increasing. So yeah, this is my update for the week. Long video, 15 minutes, 8,500 US, which is really good as a Canadian. Hold on, what is the conversion? So 11,000 Canadian, which isn't bad. I'm only able to do this because I'm working from home. I haven't been tracking I've only been tracking my gains since beginning, mid-June. So if we look at what I was only able to make 3,700 in June. So if everyone's asking, hey, why isn't your portfolio millions if you make this much? But guys, I've only been able to do this working from home. At the office, when I'm working full time, I probably can't do all these trades. I can't manage it as much, but I've been starting to monitor my trades since June, and now I've been doing really well. This is like, I've been able to make 3,000 passively while working full time in an office, but now that I'm working from home, I'm able to take a little more time to myself to make these videos and to do these trades. And then yeah, check it out. Hopefully I can do another 8,000 US this month, and we'll be happy. So that's all for now. Sorry, no actual live trades, but just an update on my portfolio. I do want to start filming more. I hope you guys enjoy this. I'm going to be doing more safer trades. Tune into the next one. Thanks, guys.